Hey, welcome to another week of a Maxi weekly review here. It's me, Max, and I'm joined again with Sid. Today we're going to do the same as we do every week. We're going to look at our predictions from last week, see how they've done. Then we're going to take a look at the market. And finally, we're going to see what new predictions we have in line for the coming week. So let's dive right into that. This last week, we had a pretty important week, as we were saying in last week's video. There's a big amount of earning calls. There's a lot of assets that had reached important levels of support. And we were looking at this week's price action to see how that support would hold and hopefully flip into resistance to continue the move upwards, or if it remains support and is now going to reject and push us back into their old bear market trend. So yeah, I think this week we should probably start by looking at the charts kind of right away. What do you think?
Yeah. I think so. Last week we had Apple
Yeah,
with the earnings call,
yeah,
and
big.
then so maybe we just look at Apple first.
Yeah, let's take a look. Apple had a very positive earnings call last week, and that was kind of right
Yeah,
at the end of the week, driving up the rest of our indexes. So it was really, helping push the QQQ and the SPY up. Um,
exactly. So the week uh, with Apple, it closed. I would say it closed bearish because we have the resistance line here, and this kind of candle, this kind of doji isn't bullish. And then we also have the Stodge RSI kind of rolling over, which isn't a good sign.
yeah, it's
So
been
yeah,
kind of flatlined at overbought for quite a while, and now it's starting to trend
yeah,
down again. So, oh yeah, there you go. You can
exactly.
see it a lot better in that one.
So my guess was that we see a pullback this week, and since a lot of the SPY and QQQ, a lot of that those indexes are weighted uh, a lot by Apple, right?
Yeah,
So if Apple pulls back, my guess is that we see the whole market kind of drop.
yeah, and leading into last week already, we were kind of anticipating a market pullback to have start, but Apple right at the end of last week, kind of with its positive earnings, has been pulling the whole market up. So now that we're seeing Apple is also starting to look overbought and looking like it's ready to kind of cool off on its run up, uh, maybe we are going to finally see the market do its pullback that we've been expecting for a few weeks.
Yeah. So and also another reason I think markets might pull back is because of the dollar. The ticker is DXY, and this is the U.S. dollar. And I think we had shared last week how there was a potential there 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 would have been a potential double bottom scenario, and
Mm-hmm.
I think we started seeing that. And here, like
It
if we
does seem,
see,
yeah,
so one, two, we're kind of curving, and the week also closed bullish. Like that's a bullish engulfing candle,
mm,
and the starch also started, you know, crossing over,
yeah.
and yeah.
Yeah,
So
and like we were saying last week, the DXY tends to move in inverse with the rest of the equity market. So as the dollar gains strength, the rest of the market tends to kind of sell off. So if we are seeing the DXY now bouncing on that line that you've marked out as support there, where it does seem to be bouncing and forming that double bottom, where last week we were also looking at that line and we were kind of expecting it's a double bottom or potentially even like a bear trap, as it was pushing down and looking like it was very much reaching the oversold area. So
right,
it's nice to see it actually has bounced there, and it does seem to be doing the SR conversion. SR meaning support to resistance. So it's
yeah, do an SR flip. So what it's trying to do is basically, um, sorry. So here's the DXY.
mm-hmm.
So what it's trying to do is like basically flip resistance to support. Now, I mean, just to go over basics, how
Yeah,
I mark out, uh, like, here's how I trade, and I think this is how we also this is what we teach at Maxi. Trading, I think it's really not that complicated. I think people tend to overcomplicate it. You don't need like 20 indicators on the chart. You don't need to, look at 15 different strategies.
You
I
just
think that
you just need to buy low and sell high.
right. I mean, as simple as that sounds,
Yeah.
but I think this, what you can do is at first learn how to mark out support and resistance zones.
Yeah.
And all you're doing is like basically playing it level to level. That's the easiest way to do it. And that's really what there is to trading. And of course, we have our indicators. We have the Maxi Trading Buddy. That's our custom indicator. And then this is just a Stotch RSI.
That's
So
it. That's all you're using.
yeah,
Yeah.
that's all you need really, because here we marked out support. So I'm going to mark out, uh, you know, another supports slash resistance, depending on whether it bounces on the pullback. But what you're doing is like looking at as many peaks and valleys. So this is, I like to start with the weekly chart, because I think I think the best way to mark it out is start with the weekly chart and then sort of zoom in. Then you could check the same lines on the daily chart, and then if you want, you could do the 4 hours even.
Yeah.
But always start with the weekly chart. So on the weekly chart, what I do is I look at where. So here you see like there are a bunch of wicks, and this is kind of a valley, and here's in the valley. So I would mark a line so that it touches all of those. Like the more touches to it, the stronger it's going to be. And
Got
and so and so I think what the DXY is trying to do, if we change this to the daily chart, you can see that it's dropping. What it's trying to do is like basically flip this line to support. So if it has to continue in the uptrend, what it's going to do, and this is the ideal scenario, is it drops here. It kind of, you know it kind of goes down, maybe it takes out a few stops, and then goes up,
it.
and then it would flip this line to support.
Yeah.
And
And if that happens, we can be kind of like more confident that it's going to move up further in the coming days or weeks.
exactly.
Yeah.
So now if it does that, what are some of the areas where it might top out?
Mm-hmm.
So for that, you change the chart back to the weekly time frame,
Yeah.
and then you're doing the same thing. So here I can see there's a wick here. There's think of it as like the floor and the ceiling, and
Mm-hmm.
that's how I visualize it. Like, um, so here you see another peak here, a wick, maybe a wick here, another peak. So I would sort of mark it um, here, maybe, and then
Mm-hmm.
maybe take this wick too. So that would be kind of the next resistance zone. At
Yeah.
least that's the way I see it. And then, so the same thing about that would be here, because you see,
Mm-hmm.
big wick. And so after
Wow.
this, yeah. So after this, what I would do is go change to the daily chart, and then sort of like finesse the same lines. So you don't need to like add extra lines. You
Mm-hmm.
just take the same lines and make sure if they need any finessing. See, so I'm just like finessing it. So here it touches this, touches all these wicks, and gets this peak too. And then the same thing here. So here, just like moving it a little bit here. So it gets this, gets this. So the more touches, the stronger it's going to be,
Mm-hmm.
and and that's what you want. So that's basically T in a nutshell. So whatever the current candle is, all you're doing is like playing it level to level.
Yeah. I like your
So
approach to it too. It's very visually driven. You don't necessarily need to know
yeah,
a bunch
you
of
don't
math. Yeah.
like. I mean, like, to be honest, I'm not good at math at all. Like for me, this visually makes sense,
Hmm.
and I'm good at this just because like it visually completely makes sense, and
Yeah.
it's the easiest way to like sort of approach this, and and so what you're doing is, if you want to take a trade, all we're doing is like using our indicator, the Maxi Trading Buddy, and what you're doing is like basically looking to see if this is like bullish or bearish, and then I
Hmm.
might use the starch RSI, but say we haven't got a bull print yet. The bands seem to be pinching, but we might get a bull print soon. Like if it does an SR flip here, and if it starts going up, and if we get a bull print, then what you're doing is playing this range, and that's all you're doing. You're basically playing here. Let me try that. So you see, so
Yeah. So then
it's
you'd
level to level.
Yeah, so then you'd enter a position as soon as like we see the flip, we'd enter a position and then we'd know that okay,
Yeah,
if we reach for instance in this chart around 104 75 ish,
yeah,
if we reach there, we should start potentially
scaling out.
either scaling out or starting to set tight stop loss since we might be ready for that pullback.
Exactly.
Yeah.
So it's like, I'm just going to delete this so it's a little cleaner. So say it reaches this zone, and then you're gonna wait to see if it either pushes past. Sometimes it could do a fake out. It's called deviation, where like, you know if if say it goes up, then it could do this little deviation and then come back down.
Yeah, so like a
This
little.
little like U-shaped thing, like that's just to like take out some stops,
Yeah,
whatever.
you can kind of see that to the left right there on your current resistance line. If you just
Uh,
like before the last bear print, you can see we
oh
were
yeah,
kind of
yeah.
like trading
Here,
right on the line, right on resistance, and then we did push
yeah.
up, and then we,
Perfect
yeah,
example.
yeah, there it is.
So this was kind of a bull trap,
Mm-hmm.
because people, you know who aren't experienced, they would have seen this, and they're like, okay, you know what, it's crossed the line, it looks bullish, let me enter
Mm-hmm.
here. But then, uh, so if it goes above and falls back under support, that's what a deviation is, and the same thing can happen at the bottom too.
Yeah, we
Like
don't. We
like
want. It's okay for it to go above and come back and retest the line. We just don't want it to fall below like it has here. So in that
exactly.
example, you can see we never really did close above the line and then bounce off of it. We only were
Yeah,
we were
it
trending
fell back.
around and then it fell straight back below, and then that line very much has been resistance since then.
Exactly. So yeah, so the DXY, um, the weekly is looking good. After this small pullback, I'm guessing it will bounce, and we're probably going to see it run high.
Mm-hmm.
And if that happens, and here's the SPY, which we talked about last week too.
Mm-hmm.
Uh, it
Real quick,
failed to.
if you're unfamiliar with the SPY, just I mean, some people might be. What it is the index for the S&P 500. So it basically
Yep.
represents the boomer stocks, like big, well-established.
Yeah.
By which I mean big, well-established companies like Kellogg's, Coca-Cola, Procter and Gamble, that kind of thing.
Right. Or Apple or
Yeah,
Microsoft.
Apple,
Even a
Microsoft.
lot of
Yeah,
the tech stocks
yeah.
are in there too.
Yeah, so you have like basically the big multi-billion-dollar companies. I think they need to be headquartered in at least with one headquarters in the United States. They need to have a market cap over $1 billion, and almost all of them have much much higher market caps than that. But that's what the SPY is. The SPY is an index that basically tracks with the general market sentiment of the overall stock market.
Exactly.
Yeah. Sorry for the
And
tangent.
yeah, no, it's good information. And so if the DXY runs up to 104, you're probably going to see the SPY, basically equities and crypto, top out here.
Yeah.
And then you're going to see the SPY like fall back to maybe here. Let's look at where the next support region is. This is a weekly chart again. So I see a wick here, I see a gap here. So valley, 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 valley. Oh, and it also kind of falls
Right on the
where
buddy.
our trading buddy strength band is.
Which
So
would be very in line with it having flipped green and having that bull print. That usually should indicate that if we retest the strength band, we should have quite a bit of momentum to bounce rather than to fall below it. So
yep,
hopefully,
but but also there's talk that like we could be entering a recession. So if that
yeah,
happens,
that's been in the stars for quite a while.
yeah,
And
then we're gonna probably make new lows.
yeah, we would. And then honestly, if you zoom out on that SPY
Hmm.
chart, we're still well above pre-COVID era value for the SPY, like
Yeah,
well above. And
this is like
given the reality of the of the
this
enterprise
COVID.
sector, it's not realistic for it to be like that much above where it was before COVID, before the supply chains all shut down, and before the cost of goods, or rather the cost of materials, rose to where it currently is. And since inflation is up across the board, across the world as well, all of these things serve to drive the price of equities down, and that's really not what we've seen yet. So I would also not be surprised to see us make some lower lows again and maybe retest that line you have there, that
Yeah,
comes,
I
yeah,
hear.
yeah,
Yeah, that'll be yeah,
that's a very
and
important level too. If that one fails, then you could see quite an aggressive fall back down to like some of those, yeah, all the way down there, yeah,
maybe this was a COVID crash, so
yeah, that
we
was a
could
COVID
even
crash,
so it needs to hold this line,
yeah.
and also we can see the starch is kind of rolling over too, so that might indicate a pullback. So all eyes on DXY. So
Yeah.
and now let's look at the crypto market because here's Ethereum and let's look at Bitcoin. So um, I think we had shared this analysis
Hmm.
earlier about Bitcoin
we peaked
being
at it last
rejected.
we peaked at it last week as well, and it's still holding up. It's
Yep, it's
still,
still it's still like here's so this was a chart and that was a resistance zone and it's pretty much the same thing. So we seem to have made a lower weekly candle too.
hmm
So that's not a great close for the weekly. It's a bearish close. That's Bitcoin, Ethereum. It's the same thing.
yeah.
Um, you know, and like we said, if the DXY runs higher, then you're going to see crypto tank too.
Yeah. So this week, I think the takeaway is definitely eyes on the DXY. If the dollar is going to be gaining strength, then equities and crypto, which I kind of lump into equities, will
Right.
probably lose some value here. It's also interesting to note if you saw our review last week, we were looking right at all of these lines, and we're looking seeing the week. We're like all these weeks are not closing above resistance, but right on resistance, and it's not as bullish as it like maybe seems because of all of the hype around the Apple earnings call. So now it's fun to look back here a week later and see, yeah, just as we talked about last week, we have not turned that into support, and it does very much hold up as resistance and is starting to push us down a bit. Um,
Yeah.
so
Yeah.
so what I really want to do is I want to see the DXY bounce on the support line that you've drawn out, and if that bounce
Yeah.
happens, I'm interested in taking short sell positions again in equities and in cryptocurrencies.
Yes. I think that's what we're going to be looking at, and I do have a feeling like if we go back to the daily chart, uh, we might see the start seems a little overbought in the DXY, and so if it bounces here,
Mm-hmm.
I'm guessing the starch will have time to cool off to and sort of reset, and then the DXY starts the next leg up.
Yeah,
At least that's my guess.
I think so too.
Um,
I think that's what we
and
should keep most of our focus on this week. It's like, the equity markets are going to move like they always do, but if the dollar is starting to give us clear signs that it's breaking out, that is a very, very bearish indication for the rest of the equities markets.
right, and and also with Ethereum. What's happening with Lido? I know
Yeah, let's
the whole unstaking.
Yeah, that's another. So just as another, since it's a weekly roundup, let's take a look at some of the big news in crypto this week. I would say one of the bigger things in crypto this week is that the Lido protocol has started allowing people to withdraw their staked Ethereum. So let me give a little bit of backstory to what that means and why this is significant. Ethereum is obviously it's the second largest cryptocurrency network next to Bitcoin, and it's also the crypto network on which most of the decentralized finance scene takes place. That's where all the trading happens, all the on-chain stuff, Uniswap, Compound, money market protocols, everything that people do in cryptocurrency is rooted in Ethereum. Ethereum itself, like Bitcoin, used to be minted into existence through a proof of work mining where people would run their computers and then use that computer power to earn Ethereum tokens. They've shifted to a proof of stake version where now instead of running computers to support this global network, people are taking their existing units of Ethereum and locking them up to help secure a validation network of nodes. And basically, the only way that a node can add information to this blockchain is if it has support from enough of a token stake, and therefore the security comes from the people who actually have vested ownership of these tokens, making sure that the progression of the blockchain is on the level, because if it isn't, then the value of their tokens becomes worthless, because immutability is the thing that Ethereum brings to the table. Anyway, when that shift happened from proof of work to proof of stake, you maybe have heard about it in the news where the carbon footprint of Ethereum, or the amount of electricity it takes to run the network, was cut by like 99%.
Right.
It now takes very, very little electricity because it isn't running a bunch of computers. It's just people interacting through software using their tokens. The tokens that you use to stake to help secure the network, you receive a reward for that. If you participate in this staking economy, you can earn a percentage of yield basically for doing so. But doing that transaction where you take your tokens and you stake them was a one-way transaction, meaning that if you have, say, one Ethereum and you decided to stake that Ethereum, there is no function, or there was no function, to unstake it, making it liquid again and making it possible for you to sell. So because this was such a one-way kind of a ticket, for your assets, there was a protocol that was deployed on the Ethereum network called Lido, which allowed for liquid staking. So what you would do, the way the protocol works really quickly here, I won't get too into it, but the way it works is you would take your Ethereum, and instead of staking it in your wallet and having it locked indefinitely in exchange for some return for the stake rewards, instead you would take your Ethereum and delegate it to the Lido DAO, the DAO standing for Decentralized Autonomous Organization. So you would stake it through them. They would stake it, and in return, they would send you a token called SETH, like staked Ethereum, or ST, I believe it is, STETH.
Right.
So now you have in your wallet STETH, and STETH represents the position that you have staked through the Lido protocol. Of course, there can be no way to unstake your Ethereum. And so now you still have ST Ethereum. There exists liquidity on the blockchain for ST Ethereum against regular Ethereum, so that you can trade out of your staked position, even though you can't withdraw it. Anyway, in the last couple of weeks, Ethereum had a major network update that added the ability to unlock staked Ethereum from this staking network. And
Right.
this past week, the Lido protocol updated their operation as well. So now people who own STETH units, instead of just trading them back and forth between Ethereum on a decentralized exchange, you can now redeem the staked Ethereum and pull back the Ethereum that is actually staked back into your wallet and make it liquid. The implication of that is that there's a lot of Ethereum units out there that are participating in this staking process and have been for years. And they've also been earning, interest for years. I think it's around 5 to 10%. It fluctuates, but I think you can expect like 6% or so when you stake your Ethereum. All of that Ethereum that's been locked up for years and years, part of it at least, is
Yeah.
now available to be withdrawn and made liquid again. So there is now a much larger portion of the Ethereum circulating supply that actually is liquid that previously was not. It was previously stuck in this staking contract, which was one way. So this week, that's the big takeaway. This week, Lido is making it possible to redeem STETH for Ethereum directly again. And the implication of that is that it makes a lot more liquid Ethereum available to the market, meaning that there may be more sell pressure on Ethereum than there previously could have been, because there now is more Ethereum liquid and available to traders than there previously was. These events were known. This isn't like a surprise. So this is priced in to a degree. Like, people aren't like blindsided by this, but it is an important, distinction between understanding something is happening and it actually happening. So, we're now in the actually happening part of this process, and we'll get to see, in the coming weeks how this is going to affect the market. Ultimately, I think the main way to play this is keep your eye on the DXY. If the DXY climbs, then Ethereum is probably going to fall. It's not, like I said, the event itself of these Ethereum tokens becoming unlocked, that's priced in. So it's very interesting to note, but I don't think it's an event that people should be using as a catalyst or as an excuse to sell a position. I think, as always, the best reason to take positions is the chart. Follow the chart.
Right. And I think that's at least how I go by. It's, news can affect the chart or like what, the current price of things, but 90% of the time, 95, 99%, most of the time, it's basically, you look at a chart, mark out your levels and then just like play it level by level.
Yeah,
I think that's the best way to sort of trade.
Yeah, I absolutely agree. But I am very excited to keep following this week to see how it works. This week, I'm a lot less uncertain about the direction. Last week, we were definitely like, it's very unclear. It's an important week to watch. This week, I think we're getting a little bit more clarity. The direction seems to be down. But again, all eyes on the DXY to get confirmation that is for sure what we want to take our positions in. And like we've drawn out the support lines, keep an eye on that level. If you see that level start to become support, meaning that the price movement is going to start to bounce there, great. Take that as a signal that we might be getting more of a sell-off in the equity markets. And sell-offs mean it's a good time to open short positions. So yeah, I think that kind of covers everything I wanted. Yeah. Thanks, guys. Yeah, so that was we wanted to keep these a little bit shorter, so we don't want to take too much of your time. So really appreciate you joining us this week. We're going to be coming back on next week to discuss how, these predictions fared, take another look at the DXY, take a look at the SPY and the crypto markets, see how everything's updating. But until then, have fun trading out there. Definitely remember to like and follow some of our socials, and then check us out on Maxsi.io. And maybe, stay tuned for the future updates that we're releasing. Thanks so much.